All right, number 2, second type of installment agreement, direct debit installment agreement with lien release. And this is a great one because a lot of folks that want to have a installment agreement either hesitate or think that they're facing that problem that the lien is going to stay on them while they pay this thing off even, so why get in one? And the answer is because of this type of installment agreement will actually release the lien. And this is a fairly new creature with the IRS. It's only been around for, I'd say, the last 5 years, but it's a pretty helpful one. It's for liabilities under $25,000 where a notice of federal tax lien has been filed by the IRS. Again, it's for debts under $25,000 only, and a lot of times this can be done quite strategically with taxpayers. Let's say you've got anything over $25,000 in tax liabilities. You can pay down your tax liabilities to $24,999 conceptually and get into this deal. So you might come with some money or assets up front to get down under that threshold there and not have to do a whole bunch of documentation, collection information statements, financials to get into this type. And it also has the ability to, as I mentioned, get rid of the federal tax lien that may be hanging out there. You set it up on this Form 9465, and I'll show you that here in a second. That's the installment agreement request with the IRS. And you're going to want to look under Section 13. If you want to make payments by direct debit from your checking account, see the instructions in fill-in lines 13A and B. That has the routing number for your bank and your bank's account number. So they're going to want to see this actual form 9465 certainly filled out to that extent there, and you turn that in with your request. So you set it up on Form 9465. You also turn in Form 12277, and that's a lien release form, and I'll show you that one here. Let me switch back to 12277, excuse me. Application for withdrawal of filed Form 668Y, which is the Notice of Federal Tax Lien. And you'll see there in Section 11, reason for requesting withdrawal of the filed Notice of Federal Tax Lien. Check the appropriate boxes. It is that this second one here, the taxpayer entered into an installment agreement to satisfy the liability for which the lien was imposed, and the agreement did not provide for a Notice of Federal Tax Lien to be filed. Actually, you'd be checking this sub box here. The taxpayer is under a direct debit installment agreement. That's the 9465 Section 13 form there, okay? Sorry, I kind of told you wrong there. You want to check the taxpayer is under a direct debit installment agreement, all right? To be clear on that. And that gets filed at the same time as that 9465. It's got to be signed. You have to have 3 monthly direct debits go out, and then the 12277 will go into effect, releasing the lien. And that's a pretty great development in installment agreement procedure here with the IRS. Now, people ask me, well, can't I just hurry ahead and make the 3 monthly direct debits all at once and leapfrog straight into the lien release? And that's a fair question. And the answer is no. It has to be 3 actual monthly direct debits. They got to see that it's actually going to start coming out before they give you the benefit of releasing the lien, okay? Third type of installment agreement, the 120-day pseudo, I call it, installment agreement. And we've talked a little bit about this one before when we were talking about different types of federal tax liens and how you might get them paid off or subordinated. We alluded to it in that process. Here's what the IRS instructions to the installment agreement form 9465 say about it. If you can pay the full amount you owe within 120 days, you can avoid paying the fee to set up an installment agreement. You can apply for a short-term payment plan if you can pay in full within 120 days by using the online payment agreement OPA application at irs.gov/OPA or call the IRS at 800-829-1040. Okay? That's just a simple, all that is just saying you call them, you say, I don't have the money, I'm gonna have the money to pay it all within 120 days, so be cool, don't file a tax lien on me, don't levy me, don't try to seize my property, and generally speaking, they're going to give you that 120 days if you can convince them that there's actually going to be money coming in, either through some sort of a windfall or something like that, to get them paid within 120 days. So that's the pseudo 120-day payment plan. Next type is the Streamlined Installment Agreement, also known as the $50,000 loan from the IRS. And if your balance due isn't more than $50,000, you can apply online for a payment plan instead of filing Form 9465. So you get to do it online. You don't have to submit that 9465. To do that, go to irs.gov/OPA. If you establish your installment agreement using the online payment agreement application, the user fee that you pay will be lower than it would be otherwise. That's a great thing to bring up here. Also, there are application user fees involved in setting up really any type of installment agreement with the IRS, and you can look those up on the 9465 form themselves. They're not huge backbreakers. If you are essentially destitute, you can ask for a waiver of the user fees in that process as well. All right, Streamlined IA, here's the details. 72-month, 6-year maximum is the maximum term that they would allow on this. So if you owe less than $50,000 and you can pay that in 72 or less equal monthly installments there, then you can get a streamlined installment agreement. You don't have to submit a collection information statement. That's the Form 433 that we've been over here over the last few days. The collection information statement is not required in most circumstances. Instead, they'll make you do this Form 433F. That's like a streamlined version, the short form of the big Form 433, essentially profit and loss financials that you'd have to do with every other type of relief request with the IRS to show them what your reasonable collection potential is. If you remember that deal, which is essentially what are your unencumbered assets, what's the value of them, and then what's your net disposable income. In other words, your income minus the expenses that you are allowed by the IRS. All right, so you don't have to do the long form. All right, next type of installment agreement is the complex installment agreement, and really the IRS doesn't call it that. It's just something that I use to kind of juxtapose it, I guess. That's a big fancy lawyer word for show you the difference between the streamlined under $50,000 type of installment agreement and anything over $50,000. I consider it to be the complex installment agreement. As I mentioned, for debts over $50,000, you have to use the 433 collection information statement, the longer one, the Form 433A, and B, if you own a large enough business, you'll also be doing a collection information statement, Form 433B, for the company. So those are required for this type of installment agreement. You do use Form 9465. That's the installment agreement form that we looked at just a minute ago. And one cool thing here, you do use actual expenses here. We did talk about different types of national standard type expenses. In other words, geographically set type of expenses that the IRS would allow. And a lot of times when you're trying to get a settlement, for instance, with the IRS, they're going to be looking at those pretty closely and not let you really exceed those national standards unless you can provide them a really good reason why you need to exceed the national standards on those things. You can use actual expenses. In other words, if it goes way over the national standards, you've got a much better shot in a installment agreement request than you would if you're asking the IRS to give you some type of a deal, some type of a settlement. They're going to really look closely at that. They look, in theory, less close at your actual expenses in the environment that you're asking them just to pay it all back to them via a installment agreement with the IRS. You do have to make sure you attach your proof of actual expenses here, bills, etc., and that goes just right along with the 9465 installment agreement request itself, or you may have to fax it in to them if you're doing this over the phone, for instance, with the IRS's automated collection systems. Those are the people on the phone that you would be talking to set up an installment agreement. They'll want to see actual proof. They may give you a couple more days to come up with it too, depending on what your the temperature of your tax problem is. So be aware of that. You mail certified to this address, and this is the address that you would be sending it to if you are a straight 1040 taxpayer only. In other words, you don't file a Schedule C, E, or F. Those are typically just wage earner taxpayers. You're going to send your installment agreement request to Department of the Treasury, Internal Revenue Service, Stop P4 5000, Kansas City, Missouri 64999-0250. All right. If you are a 1040 taxpayer with a Schedule C, E, or F, that's typically folks that have small businesses that they're filing business expenses on C, or they have real estate holdings, for instance. Typically, these you would know if you're a Schedule C, E, or F person. You mail yours certified to Department of the Treasury, Internal Revenue Service, P.O. Box 69, Stop 811, Memphis, Tennessee 38101-0069. All right. Next and final type of installment agreement with the IRS is the partial pay installment agreement. And this is a nifty one. I love this installment agreement. Its requirement at its basis terms is that you have at least $10,000 in IRS liability. And here's the overarching concept for getting one, is that the taxpayer does not have sufficient assets, net disposable income also, to pay within the CSED. In other words, the collection statute expiration date. That's the statute of limitations. So what this is going to require is that you go back and watch that video that we did about how do you find out if the IRS is ever SOL on you, and how to get the transcripts that show the last day that the IRS can come after you. And that type of transcript is the IMFOLT, the IMFOLT transcript, that shows you last CSED, in other words, the final drop dead date that the IRS has to come after you to collect a debt. So in you break that down to monthly terms. So if you only have $50 in net disposable income at the end of every month according to your Form 433A collection information statement, and you only have, let's say, 12 months left on the collection statute expiration date, you take that $50 times the 12 remaining months, and your installment agreement, the most that you would be able to pay the IRS over the course of time that they have to collect it would be $600. And so you could very well end up paying $600 for a $20,000 tax debt. And that does happen quite a bit. We just did one that we talked about in the Daily Oklahoman for a guy that he was getting ready to be married, and right before they were going to walk down the aisle, his wife said, "You better get this tax problem fixed." And that was almost the exact scenario there. He had somewhere around $50, I think, of net disposable income, no assets, and over $20,000 worth of tax debt with a very short statute of limitations on it. While he was a swinging bachelor, he never addressed the issue. And so we settled the whole case, or got him into a partial pay installment agreement for very little. It's not really based on how much you owe, it's how much you can pay within the CSED. All right? In my experience, the partial pay installment agreement is easier than an offer in compromise, OIC, but harder than regular installment agreements to get. I don't know why that is. It's mainly because the IRS is basically getting left holding the bag, typically for sometimes substantial amount of tax, because they haven't adequately in full collected, and therefore the statute of limitations is going to cause some amount of tax debt to just fall off the face of the earth. However, getting some money is better than getting no money. So the IRS does understand that concept to some extent and allows for the partial pay installment agreement. You do use Form 9465, that's the installment agreement request form on that, and you just put in your net disposable income in there and how long the statute's going to last, and you say, I'm going to pay $50, till the statute falls off, and that's how the dialogue starts to obtain a partial pay installment agreement.